This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome to the Research Talks here on Stockbox with Alan Green. Alan, we're back for another week. We are in December. Christmas is fast approaching. Are you ready yet? Is your tree up? That's the question, isn't it? Is your tree ready?
I haven't got the tree ready, but I was I've got. It was my birthday a week or so ago, and my family clubbed together, and they got me one of these little watches. You know, the Garmin watches. So you put the app on your phone, and it then buzzes you when you get emails and stuff. I also get messages when I get spending, when my wife spends money on our joint account. So I was in London yesterday, and my watch went ping, and I looked down, and I saw she spent £69.95. So I texted her and said, "What the hell's what was that about?" "Oh, Christmas lights." She said, our old Christmas lights, aren't working too well, so I went out and got some more. 70 quid on Christmas lights. I mean, it's, oh dear me.
So she kind of made a mistake getting you, because now there's no transparency between what she.
That's.
Well, now there is transparency. That's what I mean. Everyone can see everything.
Transparency now, and so I think maybe they're sort of regretting getting me the watch, because I can see everything that's going on.
Because, get a phone call. What's this for? What's that for? Who's this email from?
I get a buzz on my wrist and I know everything.
There we go. Oh, good. Well, happy birthday.
Thank you very much.
That's good.
Thank you very much. Yeah.
Okay. Yeah. And today, then, we're going to be talking about Conroy Gold, who've had, they finally announced the EGM for their joint venture, which has been long awaited. We've had two joint ventures. Yeah, I think it was almost a year ago that the original joint venture with Anglo was announced that it wasn't happening, and this new one with Dima Export was coming in. And here we are. It's taken a long time, but these things usually do. But finally, it has been announced that they're going to call the EGM. So we're going to re-look at the investment case for Conroy Gold. Of course, the market is a bit soft, so the share price has been quite a bit higher recently. And I think in a better market, it would be a heck of a lot higher. But it's just the way it is. And you're going to also talk about something a little bit different, or new, I should say, technology minerals. I'll be keen to hear about that one as well.
Indeed. It's a fascinating company, quite a unique investment proposition actually too. So, I interviewed the chief executive and chairman a day or so ago, and that interview is now out on the YouTube channel. Of course, it's a good watch actually. It's we've taken a couple of slides from the latest presentation, and the guys talk through the presentation. So, very good company. But we'll cover Conroy first, and then I'll come to technology. Minerals.
Excellent. Sure. Okay, take it away, then, Alan.
Okay, so Conroy Gold, CGNR is the EPIC code, of course. Shares are traded year high of 26p. 26p. No, in fact, they've been higher than that, 45p. In fact, this time, December last year. Currently trading at 26p, and we've seen the usual malaise since the middle of the year, just that drift in resource stocks, and Conroy Gold in that respect has been no different. However, through the year they have announced a number of developments, and it's really interesting to see what were initially a set of disparate mines and features have now come together into what the company now refer to as a 65-kilometer district scale gold mining opportunity. The original focus, of course, was at Clontebret, and that this, of course, is in the Longford Down Massif, and this is in Northern Ireland. Clontebret includes the historical Clay Lake, Glenish and Slievegar features. There was a combined initial JORC resource there of 320,000 ounces of gold, indicated, and 197,000 inferred, total of 517,000 ounces at an average of 2 grams per ton gold. So a very strong resource there. But of course, those numbers were completed some time ago. There was an estimated net present value there of $72 million initially, and that of course that preliminary economic assessment PA was put together some years ago, and of course since then a number of developments have taken place. The company undertook drilling work at Clontebret earlier this year. This was back in July, and in the process identified a series of extensive new gold targets in the Longford Down Massif, which were very similar in trend to the Clontebret gold lodes that have been identified. This is sited between the Derry Hennet gold target and the historic Clay Lake target. Then in August, the company intersected a new there was new gold intersection at Cargallis Garran. So the new gold intersection at Cargallis Garran, also adjacent to Clay Lake, they've already intersected 1 meter at 6.6 grams per ton. So that's clearly a very encouraging number. Of course, the team at Conroy Gold, headed by the eponymous Professor Richard Conroy, many years, and he's a veteran of the industry. I think it's fair to say. Conroy Petroleum, Natural Resources, Galmoy Zinc, founded Conroy Gold in 1995, and at the same time he's also an emeritus professor of physiology in Ireland there, so highly regarded. You have Brendan McMorrow, who's a non-exec on the board. He's formerly Circle Oil, also worked previously at Anglo American. Howard Bird, who's a non-exec, Southern Era Diamonds and British Gold, and Maureen Jones, of course, who is the company secretary, also involved with Professor Conroy at the other company we've spoken about, Corellian Diamonds. So Conroy, of course, had a disappointment early this year. The original joint venture that was set up with Anglo-Asian, it was decided to discontinue that relationship, and of course, the shares fell sharply then, prompting a bit of an outcry from some investors. But very shortly after that, the company announced that it had struck another joint venture agreement. That was in February this year with Demir Export AS, a Turkish company. This is a Turkish gold mining giant. And what Demir do, they look for projects around the world, and of course joint venture, where they see the opportunity and come in with the company to help fund the development of the works and the mine, and acquire a percentage ownership in the process. And that's really, I think, what investors have been waiting for. And of course, the good thing is, despite this malaise in the share price, it was announced at the end of November, a few days ago, that the deal had been struck, and shares have popped up from 21p up to 25p, where they're currently trading at now. The terms of the agreement with Demir have been sort of put together. They were highlighted early this year, but the terms have by and large been accepted, and we now of course have the EGM where the terms will be accepted by shareholders, and we can then progress to the next phase. Now, this is a 3-phase joint venture. 3 special purpose vehicle companies have been set up to deal with the various targets that Conroy have identified. In phase 1, Demir will invest 5.5 million euros. They will acquire a 25% stake in those special venture companies, a 25% stake, and there will be costs on top of that, of course. we then move to phase two. So when the mines have been or when the sites have been drilled and developed, the second phase initiates. A further 4.5 million plus costs, 4.5 million euros plus cost comes in for an extra 15%, taking them up to 40%, and then finally, once the later stage works have been completed, phase three will then take in any additional funds required to get the mines to construction ready status. And at that point, so they will have to Demir will have to spend whatever else is needed to get it to that point. And at that point, they will earn a total of 57.5% in any one of the three joint venture companies. So it's a good arrangement for Conroy, because of course Conroy still remain a major shareholder, not the controlling shareholder, but a major one nonetheless. And at that point, of course, if you've got if it's construction ready, so it's just a question of building the mine and getting the stuff out of the ground, then of course we move onto a completely different valuation metric, and that of course is it's a very exciting juncture for the company. Just to note, of course, also with that announcement, the company Conroy announced that its full year results as of 31st of May, the group assets were in total were 24, or just under 25 million euros, up from 22.5 million euros previously. Net assets 20 million euros, up from 17.5 million euros previously, and a profit before tax of 211,000 euros, and that's an improvement, of course, on the previous year's loss of 677,000 euros. So in terms of finances, the valuation of the project has increased significantly, and there's no doubt that this will continue. But certainly, from Conroy's standpoint, it's at a pivotal stage. Once the EGM approves it, then we move up to a completely different set of metrics. And of course, those long-suffering shareholders that have been stuck with Professor Conroy all these years, I think, will finally have their day.
Okay, good. So the EGM then is a formality, isn't it? Really, just to get is that correct?
Yeah. I mean, there could always be an activist shareholder in the mix there that doesn't like the deal or will press for a better deal. But I think, if you look at how long Conroy have been engaged in this process, how long the business has been going, how there are long-suffering shareholders, and of course, each year not each year, but the company's had to regularly raise funds to maintain its works, to pay the staff. So that, of course, has involved dilution, and I think a company like that has to take a quantum leap at some point like this in order to move it up to the next level in terms of valuation and development. And it's when a gold explorer morphs into a gold producer, and Conroy is at the start of that particular phase now. And of course, once the agreement with Demir goes ahead, then works will continue. But of course, in terms of investment and money coming in, they have to go through several phases before that can happen. But they're now working with a partner that's got a global reputation, very well known within the gold mining industry, and they're experts on gold. So it's actually a very, very exciting time.
Yeah, DEMA are certainly significant players in this space. I don't think they're going to do this without really considering the potential and for them to increase to build on the value. What would you put a value on Conroy, do you think, Alan, at a certain sort of level when this goes through? What would be a fair kind of market cap, do you think?
Well, I mean, here we are now. We've got a market cap of 10 million. I think it's the NPV that was, or rather the net present value from the preliminary economic assessment from a couple of years ago, put an NPV on Clontrebret alone of $72 million. So, given that the discoveries, they've made further discoveries since then, obviously the new gold targets identified across the Longford Down Massif, and the new gold target at Cargallis Goran identified too. Those are all coming in under the proposed works and relationship with Demir on these special purpose vehicles going forward. So I think you could start to look at the net present value attributed to the asset and look at that as a potential target. So, we're at 10 million now. If it's 50 million sterling NPV just for Clontibret, and you apply that metric, then we've got some serious upside potentially in the wings for Conroy.
Okay, excellent. Well, thank you, Alan. And as we approach the end of the year, hopefully that EGM, well, it will go ahead. It's been announced. Might see some increase there in the share price towards the end of the year. Maybe an early Christmas present, and then we'll go into the new year. And yeah, maybe 2022 is Conroy's year. Let's see how it goes. But thank you for just reiterating the case there for us. So moving on to the next company, and that is Technology Minerals. Yeah.
Technology Minerals, indeed. This is a company that has it listed it listed last month on the 17th of November. Came to market with a market cap of around 30 million, standard listing, and is the first UK listed sustainable circular economy company engaged in battery metals. And of course, this is the net zero objectives, sustainability are key themes of the recent COP26 conference, and the model Technology Minerals, EPIC code is TM1, by the way. The model there that the company are pursuing is completely sustainable, and it's sustainable really through two key drivers. The first one, of course, is the exploration business. They have 5 different projects which are seeking cobalt, nickel, and copper and lithium. And these are across 5 territories. I'll come to those in a second. And then they have the recycling arm of the business, which will recycle lithium ion and lead acid batteries into the market, and the black mass that comes out of that, along with the lead, the plastic, and the acid, can all be resold into the market. So it's a fascinating model. So the company, first of all, the people at the top. The executive chairman is Robin Brundle. He's been in the business for many years. He's got a proven track record of bringing businesses to market, turning them around, and bringing strategy and culture change. Worked a lot in aerospace and the automotive industry, and I believe also he's the brother of Martin Brundle, who's of course in the Formula One. He's a Formula One commentator now, former driver. The chief executive is Alex Stanbury. He's a corporate finance specialist with a lot of contacts in the city, and has 15 years experience in the natural resources sector. So he's done an awful lot of work in mining and looked at umpteen different projects over the years. CFO is Nigel Ruddock from Grant Thornton, and then we have Lester Kemp, who's chief ops officer, and Wilson Robb, who's chief technology officer. So a very, very strong team behind the group. If we look first of all at the mining projects that the company is engaged with, firstly, in northwest Spain, there's the Astamat project, where there are 7 exploration permits, one of which has been granted, and there are 6 currently awaited. And the area there is prospective for cobalt, nickel, and copper. We then move to the USA in Idaho, where there are 2 projects. Firstly, the Blackbird project, where Technology Minerals are set to acquire a 100% interest in the Blackbird Creek property, which covers some 40 to 50 kilometers. And this is sited in the Idaho Copper Belt, and the territory indeed is prospective for copper and for cobalt. Then we have the Idaho Empyrean project, where the company are already engaged in exploring for cobalt over a 55 square kilometer area. We then come to Cameroon. Technology Minerals Cameroon has 5 exploration permits in southeast Cameroon. Already conducted some early reconnaissance on the territories, which are prospective for nickel and for cobalt. And then finally, of course, we've just been in Ireland with Conroy Gold, but they have the Leinster project, which is around Wicklow, near to Dublin. There are 15 licenses there, prospective licenses for lithium pegmatites covering some 470 square kilometres, so a huge area. These have been valued by the company, so there's approximately a 2 million valuation attributed to Astomet. Both Idaho projects are worth 10 million. So Idaho, the Blackbird project is worth 2 million. The Empyrean project is already estimated at 8 million. Cameroon project is estimated at 5 million, and the Ireland project to date at 3 million. So that's with a total attributed value of 20 million. 20 million sterling. So that's obviously a significant factor in the company valuation. So that the metals come out of the ground, go into the market. Then at the end of life, of course, there is the recycling process, which is really the key cash generator in the business. And this is, I think, where the really exciting upside comes. We've already got the nascent value of the mining properties that I've outlined. So the Technology Minerals owns 49% of a company called Recyclus, and Recyclus recycles lithium-ion batteries and lead-acid batteries. Now, the battery market is going to be worth some 130 billion euros by 2030. It's absolutely huge, as we know. Of course, these are batteries for EVs, batteries for marine, batteries for aerospace, and every aspect of the lives that we now lead. There is a well-documented supply squeeze expected due to the upswing in demand through vehicle manufacturers publicly stating they're moving away from the internal combustion engine and going to electric only. So in order to meet this demand and also help to mitigate some elements of the anticipated supply squeeze, Recyclers have set up 2 plants at Wolverhampton and Tipton in the Midlands, where these batteries will be recycled. So when you take the metals out of the batteries at the end of life, once they've been recycled, it then creates a black mass, which is a black mass of the component metals. Now, this can be resold into the market, and current prices are around 4,800 per metric ton. So that's a pretty significant number. Lead can be recycled at 1,100 pounds per ton, plastic at 262 pounds per ton, and acid, of course, from the lead acid batteries can be recycled at 80 pounds per ton. So the revenues there are significant. So the black mass in particular can either be traded on the commodity markets or sold direct into the industry, and of course that would be the automotive industry, aerospace, and so on. And the company have a very clear road to profitability. They announced a partnership with Slicker Recycling a few days ago, and the Slicker Recycling partnership means that they will have access to 13 depots nationwide. Slicker executes more than 25,000 collections per annum, and those will be transported directly to the Recyclers Group plant for recycling into the market. Now, from this year one, Technology Minerals estimates a turnover of just under 10 million with a small loss the first year. Year two, it'll be up to 28.5 million with a profit of 5 million. Year 3, 55 million turnover. Year 4, 110 million. Year 5, 220 million, with exponential increases in profit margin from that. And that's just based on what's already in the pipeline. They're having loads of inquiries coming in, from major battery manufacturers about taking in the batteries. So I think there is expectation that the plants that they already have will be scaled up. They'll be building new plants and bringing new plants on stream pretty rapidly to meet the demand. And certainly, when I interviewed Robin Brundle and Alex Danbury, Robin did say that the numbers were very conservative because it's changing all the time. There's more coming in all the time. So quarter one in 2022 is going to be a transformational time for the company. It's come to market. The shares haven't really done much as of yet. We're sort of trading currently at just over 3p, been as low as 2.8p on the year, and obviously at around 4p, I think is the year high to date. But I think we're going to see an awful lot more action from this company as we go into quarter one, and obviously as these deals start to come on stream. But certainly the recycling business is going to be the cash driver, and I think they've got a unique and a very exciting circular economy model.
And this revenue then that you speak about, that's purely from the recycling of batteries.
Exactly. That's the thing. So obviously, we spoke about Conroy and the asset value of 20, just under 25 million euros attributed to Clontebret. So in the same way, they've been able to place a valuation on each of the five mining assets, and that's a nascent value. So the company trades on a valuation on that part way reflected in its valuation, but in terms of cash generation, the cash generation certainly for the first few years is going to come from the recycling business, and that's it looks set to be a huge player in the industry. They've got all the infrastructure in place. They've got a great board, many contacts throughout the automotive space, and it's going to be. It looks like this is very much on the launch pad right now and set to blast off next year.
And they're already set up. You say they've already have these things in the pipeline. So I mean that's pretty significant if they can build their revenue like that. And of course they've got the projects as well, that then they can use the revenue from the recycling to fund exploration.
Exactly. So the whole circular economy thing, that they can start to fund their own development, and really in that regard they're going to be self-funding. So at this juncture, there's there won't be a need for the company to raise money. It's come to market. It raised plenty of money when it came to market. So it's highly unlikely that even if they just stick to the plan that's already in place, and that's on the company presentation, looking at both the plants, I mean the plants are pretty well equipped and ready to go as we stand anyway, and those are the lead acid and lithium ion recycling plants in Tipton and Wolverhampton in the Midlands. So it's at a very exciting juncture.
And when did it come to market, Alan?
November 17th.
Right, so very recent. Okay.
Yeah, so literally just come to market. Yeah.
Okay, well, thank you for bringing it to our attention and presenting the case there. This sounds very interesting. It's the first company I've heard of that are into recycling of batteries, because it is going to be a problem, isn't it? We've got all these batteries that they will get spent eventually. Their lives will come to an end, and we need to do something with them. So, Well,
we do, and the thing is, there is going to be a supply squeeze too, because the massive upsurge in demand is creating a supply squeeze. And obviously, we've seen that reflected in the price of lithium that's rocketed this year. Also, copper has rocketed in value, cobalt and nickel likewise. The more expensive it becomes, then the more demand there will be for the recycled black mass, and of course that black mass goes back to market and is recycled into its component metals again.
Great. Well, thank you very much, Alan, again for giving us the research talks there, and I wish you a good weekend, and we'll catch up again later on.
You too, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.